What's up guys, latest update on MMTLP stock, Meta Materials preferred shares. It has been a crazy week for MMTLP shareholders, and in this video I will look at what the hell is going on right now. I will look at the real value of the holdings in NextBridge Hydrocarbons and what holders of the stock can do next. Anyways, before we get into it, if you enjoy my videos, remember to smash the thumbs up and subscribe to the channel if you're new. We recently passed 15,000 subscribers on the channel, but amazingly over 80% of my viewers are still unsubscribed. So join the family, subscribe to the channel, and help me hit my target of 300 likes on this video. And don't forget to turn on notifications to make sure you do not miss out on any new content. And remember to check out the Discord, there's a link to this in the description below. I'm not a financial advisor, but this is completely free and well worth a look. Now let's get into today's video. On Friday, Meta Materials announced that it had completed the distribution of common stock of NextBridge Hydrocarbons Inc. as planned. As previously disclosed, holders of the record of Series A preferred stock of Meta at the close of business on December 12th will receive 1 share of NextBridge Hydrocarbons common stock for each Series A preferred share pursuant to the process set forth in the prospectus. But in case you have been living under a rock, things did not go as planned, as FINRA have screwed MMTLP shareholders. Retail investors say FINRA abused its power by halting MMTLP stock. On Friday, FINRA shocked retail investors everywhere as it halted trading of MMTLP stock ahead of the new spin-off, ahead of schedule, leaving investors screwed. So what has come from this now is that MMTLP investors are signing a petition to override FINRA's alleged illegal halt of Meta stocks. Now, for a little bit of important background about this. Meta Materials is a Canadian firm that was listed on Nasdaq in June 2021. Meta Materials merged with Torchlight Energy in order to be listed on Nasdaq. FINRA revised its notice regarding the corporate action of exchanging Meta's Series A preferred shares, or MMTLP, for shares of common stock of NextBridge Hydrocarbons. But FINRA's halt of the stock prior to the agreed date has outraged retail investors, accusing FINRA of market manipulation, while others have touted the levels of short interest, and many traders have called for a lawsuit against FINRA, naming market influencers such as Elon Musk and AMC Entertainment CEO Adam Aron as targets. Now, at the time of this writing, over 2,000 grieved investors have signed a petition against FINRA, citing the suspension of the stock as unlawful, greedy, corrupt, and thieves. Now, as you can see here, as of today, there is now over 12,000 signatures. Now, for anyone who is still not 100% sure of what is going on and why there is so much talk about this right now, here is the best explanation. Shareholders of Torchlight Energy were entitled to a Series A preferred share after the merger with Meta Materials. Then, after the reverse split, shareholders received 1 Series A preferred share as a dividend for each share of TRCH, and a placeholder ticker appeared in investors' brokerage accounts and was coined MMAT-A. But this is where it gets interesting. In October of 2021, an unknown entity found and exploited a loophole in the filings and created a market for the Series A preferred share. The preferred A shares became tradable on the OTC market and were mysteriously named MMTLP. Holders of these shares noticed that MMTLP shares appeared in the brokerage accounts with a cash value of 50 cents. It was later discovered that these shares could be bought through a small handful of brokerages, which is exactly what has been going on for the past year, and with massive retail interest in this opportunity. And on the 22nd of November, shares of MMTLP reached an all-time high of $12.50, going from just 50 cents in the beginning. And this is what former TRCH CEO John Brda had to say about the whole situation and FINRA.
So we want to get into what happened. Why is this such a big deal? Here to help us out is former Torchlight Energy CEO John Brda, who's... Let's get to the crux of the issue here. Explain what happened for the audience who may not know what's going on.
Back in June of 2021, we concluded a merger with Meta Materials, and as part of the business arrangement for that transaction, we were to issue a Series A preferred share that was to be non-tradable, and we closed that transaction and issued 165 million shares to those shareholders of record, and we went about closing the transaction. And fast forward about 4 months, and after kind of doing some investigation on whether or not the entire short positions were closed out, we found out that that truly didn't happen. And then two market makers got together, went to FINRA, went to OTC markets, and started trading the Series A preferred as MMTLP, or metamaterials preferred. And they did so with fraudulent information on OTC markets. And when I found out about it personally, because they were using my information, I called OTC markets and was advised at that time that FINRA approved it. Two market makers got together and listed it without company input and without the issuer knowing. And they went ahead and allowed it, and decided at that point they were going to do nothing. And so that's
John, this was not, the company had nothing to do with this. Two market makers said, hey, we want this to trade. FINRA said, okay, we'll trade. Let's talk about the synthetic shares, or the shorting that goes on, and how this happens over and over again. Shorting that you know, for many people, it's never, you know, it's sort of a way that these firms have been able to abuse smaller companies, smaller listed companies.
Yes, 100%. Thanks for bringing that up. So smaller companies like Torchlight and other companies that are out there in the small cap space that need to consistently raise capital to further their business plans are the targets of basically hedge funds and shorters that short ahead of a potential offering, or short just to create pressure in the market, so that when a company has to go to the market to raise money, they're getting their stock at a cheaper price. And the only way for a synthetic or a naked short to cover is if the company actually issues real shares, because otherwise they're just sitting in a naked short that they haven't borrowed, and they have not done everything the proper way. So that's very pervasive in small cap stocks, and companies in particular that need to raise capital throughout their lifespan.
I got less than 30 seconds. And people on Twitter are saying, like, other firms are now saying they won't allow any trading in the stock. I mean, I'm not sure what the goal was with these two firms. I think Canaccord and another. What's going to happen from here, John?
We really don't know what's going to happen from here. FINRA halted the stock on the last two trading days, when the only trading that could have gone on was buy to cover. And quite frankly, if there was a real problem, if there was no problem with the short position, according to OTC markets, there's only 6.5 million shares short. Well, if that's a problem, they could have worked that out in 2 days.
Yeah.
But they decided not to do that. They halted the stock, and now, as you know, it's up for us to continue the pressure on that.
All right, we'll keep the pressure going and keep us informed. I wish we had more time, and it is complicated, but...
So now what has happened is that, as per MetaMaterials press release, as previously disclosed, holders of MMTLP stock will receive 1 share of NextBridge hydrocarbon stock for each of their Series A preferred shares. And this is a serious problem. Most of the traders involved in MMTLP were involved for the impending short squeeze that many believed was coming, and very little shareholders would have had any interest in this oil and gas company, NextBridge Hydrocarbons. The fact that this is now a private company means the shareholders are now trapped with no way out, and of course this would not have happened if FINRA had not done what they did. Now, I came across this little write-up on Reddit about reasons to be optimistic about MMTLP and some reasons not to be. First of all, as we already know, it had been shorted multiple times to float, including massive shorts that rolled over from TRCH. Counterfeit shares all have to close. Unlike most squeezes, MMTLP shorts can no longer be hidden in swaps or tokenized shares, mismarked as longs, twisted up in options markets, wrapped in a single stock index fund, offshored under different tickers to foreign exchanges, buried in hedge funds' foreign subsidiaries, or allowed to FTD by market makers, so there's no more hiding. There's a link to this in the description below for anyone who wants to have a read of this. Then there is the next point. Oil and gas are projected to increase significantly over the next decade, which is true. So now is a good time to be selling rights to 3.2 billion barrels of oil and 7 trillion cubic feet of natural gas. NextBridge has 335 million shares beyond the current 165 million, so they can sell if the price is right, and those profits will only increase the value of the remaining shares. Now, as much as I agree with some of this, the problem as usual is that the numbers don't lie. In the S1 filing last month, we can see the balance sheet of NextBridge Hydrocarbons. The company has total assets of 51 million and total liabilities of 23. This gives NextBridge total stockholder equity of just $27 million, which, considering that there is 165 million shares legitimately, means that the stockholder value per share is only really about 17 cents. Now, there are so many who would have bought these shares for dollars right up to the all-time high of $12.50, who are now trapped in this with shares with a value of 17 cents. So I am very interested to see how a class action lawsuit against FINRA will go. So this is nothing short of a disaster for shareholders who are left holding a stock in a private company. But everything that has happened over the past few weeks does seem very odd, and this lawsuit against FINRA is not the only lawsuit this week that involves MMTLP, TRCH, Metamaterials or Torchlight. A lawsuit has begun in the past few days regarding a $100 million pump and dump scheme that stems right back to when Metamaterials first merged with Torchlight, that's seen the creation of MMTLP stock in the first place. With 8 defendants currently facing up to 25 years in jail over the leading of a pump and dump scheme. If you would like to hear more about this, then drop a comment down below and I will make an update video looking deeper at this. So guys, what do you think will happen next as a result of this petition and the lawsuit that will be coming? Let me know in the comments below. And if you are an MMTLP shareholder who has been burned badly here, then drop a comment and let me know what you are doing and what you think can be done. Anyways, if you're new to the channel, like and subscribe. I will post another video that I mentioned just a moment ago. If that is something that you want to see, then let me know in the comments below. Subscribe and turn on notifications and I'll catch you in the next update.